Is there an indicator for measured moves? You just draw it by hand. You take a trend line and you start at the top of the swing high and you go to the low of the swing low, and then you go to the rest phase and you just copy this or put a new parallel, or however, in TradeStation it's a new parallel. In multi-charts it's clone, but they'll give you the exact same line and you just fit it to your chart and you get an area to measured moves. It's also helpful if you don't have a trend, because you should wait until the market breaks the low here, price breaks the low, before you draw the trend channel. So the measured move kind of, it gives you a workaround when you haven't had that break yet of the trend channel. Okay, so this just jumps right out at me as a first higher high trade. So let's take a close look at this. We've got the downtrend line has been broken over here, right? And we get a nice rally up. No volume on this because it's happening in the overnight. This is happening in the early part of the early part of the European session. Again, notice the pulse, rest pulse, right? You're never going to not be able to see that. So we got the downtrend break. We got a nice rally up. Now this time, as we come down, we don't have any supply. We can see that. And this time we have a test here. This sometimes they call it double bottom. It's not a spring because we didn't penetrate. If we had penetrated, it would be a nice spring because you have this in the background. You have this demand in the background. But we didn't have that. It's just a regular old test or a double bottom, whatever you want to call it. We get a rally up and we get a new high here, a higher high. And we've gone over this swing high. We actually had, this was the last swing high here. And we go up here, we have a higher high. But we didn't stop. So this is not the first higher. We didn't get a decent pullback. We came back and tested that, or double bottomed, whatever you want to call it. So that is not part of this trade setup. This, however, is. And again, you can see how we've gone deeper, right, than you typically will go. But look at this price bar here. It just sings out, buy me. This is a key reversal bar where we come underneath the lows of the prior bars, rally right back up and close on the high. That's a nice little bar. As we can see as well, we have demand coming in on the rally up. We don't really have that over here, but we surely have it here. As volume expands to the upside, that's demand over supply. As we come back down, volume tends to recede. Doesn't dry up all the way. It's not a one-to-one relationship, but we're not seeing price action expand to the downside. We don't see that. And in fact, it's lower than the rally up. So it's another way to look at it. Price bars overlap a lot. You can draw a line through these. It's a fairly choppy move down. And then notice that on bar one, we get a little pop in volume. That's volume coming in off the bottom. Because there was volume, and notice where it is. It's coming in where demand showed up earlier, right? Where we have demand. It's come all the way back down and checking cause there's high volume in here, right? So it's checking to see if there's supply left down there. And there might have been, in fact, and they came back and they tested again. That's bar two, a nice little test. And I didn't do measured moves or trend channels in here. I mean, look at this pop up here to 3. That's a gift. And if you haven't gotten out by 3, well, then 4 is telling you it's time to go. So, in fact, that's a bigger move up than a measured move. And probably if you did a trend channel, you're way overbought as well. So it's a nice little gift. And if you are trading this and you see this as just going straight up, hang on to it to see where it will go. You don't know. And typically, it's not, as I say, it's not going to V-spike and reverse on you. It's going to come back up, and here it did a little test up in there on bar 4, or came back up and revisited that area anyway. Is the first lower high trade really the first lower low trade? Oh, did I say it backwards? Yeah, first lower low. Sorry, I must have been a little brain dead when I wrote that. Thank you for that correction. Yes, it should be the first lower low. You can also use a price projection tool for a measured move. Dan, you can, but let me suggest something to you. And that is that in the middle of trading, using a lot of different things and having to think a lot, it's stressful enough as it is to trade. And when you've got to bring out projection tools and all kinds of other things, personally, for me, I find that to be too cumbersome. And I just like to do it as easy and as simple as I can. Keep everything as simple and as straightforward as I can. But that's just me. I mean, if you're happy with projection tools, go for them. That's have fun with them and use them. Where would I take this trade given the trading? Well, right here, either on bar 1 or bar 2. Those are, or bar 2.5, or this bar here. You've got opportunities at bar 1, bar 2 on the test because the volume is so low, or if you want to wait until the test is over on the next bar. Either you can buy stop your way in on the test, or you can wait until the close. And then your stop is underneath here. Now, gold is more volatile in general than the other two markets. So that's something to think about, right? Entry would be above bar 1. Entry would be right on the close of bar 1, or on the close of bar 2, or on the high of bar 2. You could also buy, you can do it, as I said before, it's the same thing. You can buy stop your way in as it's coming in. Just place your stop a little bit above, and you would actually go in on the top of bar 2. That's what that would get you in at.